Welcome to another episode of the Dog Suit. Today we have with us Jugal Choksi, a trailblazer of the Indian finance scene. Jugal is a graduate of the prestigious IIT Madras, one of India's top engineering institutes. He began his career at BCG Mumbai as a management consultant and eventually transitioned to GIC's private equity team, where he has invested over $700 million. Some of those investments include stakes in hospitals and healthcare systems across the nation. We have the privilege of sitting down with him and getting a glimpse of how corporate entities view and categorize the health of our very hospitals. Welcome to the Doc Suit, Jugal. We've been looking forward to having this discussion. Yeah,
Thanks, Sharon. Thanks, Mohit. Thanks for having me here. And I know I've been looking forward to this discussion myself. Look forward to whatever questions you have and to have a fruitful discussion.
sweet, sweet, man. So just to sort of get into the discussion, getting right into it, what's one thing you wish doctors understood about investors?
Hmm. That's an interesting question. Uh, so if I think about it, the biggest difference when interacting with doctors that I've felt is investors are used to seeing at things very top down, making quick uh, go no go passes on investments and trying to do some more pattern recognition before getting into the details. So there's a very uh, high cost of uh, spending time in something where you are not really getting much value out of it, kind
Okay,
of thing associated.
okay.
When I compare that with doctors, you guys are trained in a way that nothing should go wrong, right? Even one mistake uh, is like it translates to a big cost. So
We err to the side of caution,
yeah,
definitely.
exactly.
Right.
Yeah, and which is required, right? Like the cost of mistakes investors make versus the cost of mistake which a doctor would make is completely very different.
Right.
We don't deal with lives. So yeah. So I think when interacting with doctors, especially on the business side, when you look at operators, people running hospitals or facilities, the same mindset seems to be coming in when we are discussing, say, business strategy, we are discussing some of the
I
capital allocation
see.
decisions. So
Mhm.
there's more caution which I see instead of
Taking a
there's this
risk.
mindset of we need to get it right the first time. We can't
Ah,
can't fail. All of those things. Versus investors have, of course, seen uh, businesses failing, businesses not scaling. Some decisions go right, some go wrong. All of it. So there's a difference of mindset which sometimes jams decision making when you are having those meetings.
Is it only in the healthcare industry or the other industries where you have noticed this lag of delay in decision making itself?
Um, I would say it exists like it. See, like in each industry, there would be people who are more cautious. Like it's based on the personality as well, right? But I would say it's more prevalent that I've seen
I
in
see.
healthcare for sure. Uh, yeah, it's also a function of just how doctors are trained. Like it's
Right.
the duration for which you go through
Training.
the rigorous trainings and having seen maybe things gone totally wrong due to
Yeah.
minor neglections. So I think that's why it exists. It's there in other industries, but I still feel that it's the highest in healthcare, especially in medical professionals.
Makes sense.
It's very insightful, man. It's very, very insightful. Um, all right. Sort of to begin with, so one of the questions that I think Mohit and I both had is why do hospitals attract investments from banks and equity funds in the first place? Right? Like from what we know, they have razor thin operating margins, 5, maybe 10% on their best day. So why invest in hospitals in the first place?
Got it. Yeah. Okay. That's an interesting spin to it. So I'll just answer it in two ways. Like the short answer, I would say, is good healthcare facilities are profitable. Uh, there are hospitals in India making, I would say, 20% margin. So
Wow.
there's a spectrum to it saying maybe that at the average the profitability is lower or newer facilities might not be as profitable, but there are good proven models which exist. But to the overall question of why even invest in healthcare, uh, I would say why not invest in healthcare, because it's right at that sweet spot of everything an investor dreams of, right? You want something which is mission critical in terms of demand, which is
Right.
never going to go away. Uh, you want local moats, and all the more in today's world of where software is in a way eroding all the competitive advantages, something which can endure for a longer time.
Nice.
And yeah, lastly, long-term compounding is what investors look for. So if you just look at it from this point of view, I
Hmm.
think healthcare fits perfectly, where uh, there are no business cycles. Everyone is going to, in a way, come to healthcare facilities because they are the backbones in a way for social security, right? Like if in
Correct.
case there are profit pools eroding, if there are other structural challenges which hospitals might be facing, government will never let you shut down. There'll be all kinds of support which comes in. So the downside is quite low when I look at healthcare facilities as investments. Uh, so the frame which I apply to any investment would be that look at it in terms of what is a high confidence case in terms of how a business can grow,
Hmm.
what are the cash flows that you can expect, yeah, and then look at the funnel of how good can the outcome become. At the same time, what is the downside risk?
Downside.
What if
Yeah.
it doesn't work out?
Hmm.
So if you look at investments like say crypto, uh, it's
High
a
risk.
very
High.
wide funnel,
Yeah.
right? Where the
Correct.
where the so the funnel is quite broad in terms of I might make 100x, but maybe it gets banned and I am sitting at zero
Correct.
in at least some countries. For healthcare, the way I look at it is the downside is very protected. Uh, there is stable demand. There is for sure going to be the footfall which you have today. Like when I invest in a hospital today, what I'm seeing as the patient footfall most likely is going to persist if not grow. And then
Yeah.
the same
That
thing
is
is on the
wild.
profit pools,
Yeah.
right? So
That is, yeah.
what am I looking at? Yeah. So as an investor, if I'm underwriting, say, 20% returns or 25% returns, that I'm expecting in a high probability scenario. Uh, Compared to a lot of other investments, I still maybe end up making 12, 13%, but then I have the upside of a
Being
lot of other
protected.
levers that I can pull.
Correct.
Yeah.
Another interesting point is,
Yeah.
so what I've realized is in the US specifically, right? His like private equity firms used to actually invest a lot in healthcare. They used to buy group
Mm.
practices, and that was the
Yes.
history, right? So once they bought the group practice, they would actually remove it out of the network of insurance, and then patients had to pay upfront, and eventually in the whole patient journey, insurance does not have to bear a lot of the load. But now what has happened is the trend of private equity are actually investing in a lot of biotech startups, just to such as genomics, personalized medicine, just in the hope of that one day something will click. Do you think it's a high
Mm.
risk, high reward game, or how where is the trend of private equity investments actually going?
Got it. Yeah. No, I think that's interesting. So this is again back to the same uh, mindset of thinking what is the risk reward that I want to play for.
Right.
Hmm.
So, because you are specifically talking about the US healthcare system, it's much more mature than the
Hmm.
emerging nations. So, if you look at hospitals or doctors per thousand people of the
Yeah.
population,
Yeah. Yeah.
it's more or less where the WHO levels would be prescribed at. So the
Correct.
shortfall of infrastructure is not as much. So what that leads to is uh, the if you have an acute shortage, the healthcare system is at the beneficiary of say pricing, of capturing most of the value in the value chain, all of those things. So that's where the profit
Right.
is accumulating across the entire value chain. Now in US, what has happened is because there is no growth and any incremental facility is now competing for the same pool instead of trying to create a new market. Uh, the pricing power or some of that leverage goes away from the
Goes
hospitals and
away.
it shifts to, yeah, so it shifts to someone else in the value chain. Uh, for example, in the US now, insurance has a big play. They have a huge role in dictating how the procedures can be charged, how can you bill them, what is the price caps which can be approved, and even in terms of uh, in the customer experience, like patient experience, right? Because the hospitals in India are still looking to get paid out of pocket broadly, or even if
Correct.
the insurance is paying them, it's a patient's responsibility to make sure that the payment goes through.
Correct.
There's a very big difference in what the patient's experience is there in the hospital. In the US, the patient is uh, in a way not responsible for making the payment at all. It's a separate backend which works with the insurance system.
Correct.
So there
Correct.
they are. Uh, the treatment is very different. The experience is very different. So that's broadly how it's playing out. So to a point on how the investment is shifting, it always shifts to where you see, the biggest value getting captured, where the profit pools are getting concentrated, and that should be uh, sustainable in the long term. So if they're seeing that over time, profitability of healthcare systems are being eroded, it's uh, being competed only on price, or even, only on capturing market share from the other player. It's not a good uh, pool to play in the first place, let alone which player you are betting, or which healthcare system, like which hospital system you think is doing best.
There
So
is.
yeah.
Sorry.
No worries. So that's all my point is. So then they start looking and seeing what are the other emerging areas, right, where market is being
Right.
created. Can we get there early? Because there's always value being created where you get in early, where it's not discovered, and you place a bet, say 5 years before. There's more investors coming to it. So it's the same thing as uh, like we talk in a hospital system, there's more players, you'll have to compete on price. The same thing is happening at the capital level with investors, that if there's enough money chasing the same asset, you have to pay up for it.
Right.
So maybe you have to buy the same hospital chain for a higher valuation, and then
Because more people are
you
willing to pay.
exactly right. So
Right.
it's a scarcity
Right.
premium which chases it. So then you need the hospital to grow as much, you need as much cash flows to compound in the same duration for your returns to make it work. And after a point, it's difficult to see it happen in a fully discovered market.
So how do you actually go about market discovery? I know it's a very off the broad question and also value creation.
Yeah,
What are fundamental steps, you know? I mean, because like from what I've noticed is, okay, let's say India, eye
yeah,
care is lacking. So what has been done now, they're getting integrated practice units for eye care. Same with cancer care.
yes,
Uh,
yeah,
what is your approach to market discovery?
exactly. So the specific points you pointed out is exactly a very big theme which is playing in India. So
Hmm.
single specialty hospital chains uh, is a proven theme. So in the last 10 years, if you look at it, everyone who would have invested in most of these single specialty hospital
Hospital
chains in
chains.
India has made money. Uh, and the reason for that is all these single specialty chains, they all focus on particular set of procedures or surgeries where they can bring in doctors who are well known for
That
performing
specific thing. Yeah.
those the specific things. So you attract demand, but at the same time you have incredibly efficient unit economics because you only have the specific machines which is required for those procedures. Your uh, size of the center or the hospital is optimized for the particular kind of footfall. So you
Procedures and footfall.
optimize the
Yeah.
the operations are completely optimized for that kind of thing. And what that ends up giving is it gives you uh, for the lack of better word, it gives you a better ROCE, which jargon in the finance industry, but it gives you better return on capital. Because
Right.
what are you looking for at the end, right? Like you have, say, as an investor, you have a pocket full of money. You want to
Right.
put it somewhere and you want to sweat that money to give you the highest returns possible.
Correct.
You can put it in a fixed deposit and get 5%, or you can think of a company as a machine which takes some money and it sweats out some return on capital. So
Correct.
all these single specialty uh, chains that you look at, they have high return on capital, north of 20% pre-tax.
Oh
So
wow.
that's what helps it a lot that at a unit level, if I'm getting a 20% plus, I can just keep on pumping more money, find the right places to open these centers, and make
Make
my,
money,
say,
yeah.
chain of 20 centers or 40 center in 5 years. So every center is giving me profits. That money which is coming out of it, I keep on reinvesting it in the business, and it compounds over time.
That's
So that
amazing.
play works out well, and that's why things you mentioned, right? Like eye care, cancer, even IVF, pediatrics, all of these are themes which are played out well to deliver good returns
Surprisingly,
to
primary care
investors.
is never a theme. Primary care
Yeah. Other reason,
GPs, I don't know why. In fact, we were having a discussion with one of our prior guests. He said, I mean, everyone mentioned that primary care integrated at the baseline will improve healthcare
Healthcare
delivery.
outcomes, yeah. But
Issue
like
is,
that would happen for sure, but like does it help the investors? We don't know, right? Like it helps the patients and the population, right? For sure. But like it's so because primary healthcare is also like very so broad. It's hard to optimize, I presume. I would imagine it would be very hard to optimize something as complicated as primary care.
got it, got
Right.
it.
yeah, you are right.
Um
So the reason that happens is it's a very, how do I say, a well-known cycle which everyone goes through where when trying to do something in the healthcare, it feels like there's a white space in primary healthcare delivery. Why not fix it? Why not come up with better delivery models, maybe do something
correct.
online, a subscription, loyalty, one of these
Sure.
things, because it feels like it's broken. Then they discover that the unit economics are broken, it's impossible to make money, and then
It's
they
very
go
hard,
back
man.
to creating that gap. So that's why the gap always remains. And the unit economics are broken because of the ticket size. Like if you as a
Right.
doctor or you as a healthcare facility are spending 1 hour in performing a surgery in the OT, the money that you sweat out of that assets and the people you have invested in is a lot more than say 1 hour of consultation in primary care. So
Mm.
it's
That
very difficult to
that is
make the same money with the same
I think
resources.
so.
go ahead.
I think so. What's
Yeah.
happening right now is primary care do make money based on the volume game. It's like your commodity business, right? So the more volume you have, the more return on investment you have. But like, let's
But
say, example, specialty specifics, eye care. You do get a lot of money on that, but that's per procedure. So I think so.
Yeah.
The decision pathway goes about whether you want to get into the commodity volume game business or the high profitability per procedure business.
but Mohit, you have to understand like eye care is not primary care, right? Like eye
Oh yeah,
care is also
definitely.
specialty care.
Specialty
So
care, correct.
problem with primary care, as Jugal mentioned, is one, the ticket size, and two, the variability in ticket size also. Right,
Mm,
like for that 1 hour, you can, if you're billing a patient for just medications because you're trying to tease out a good history and then you're billing a patient, that is very different from, oh, this patient is going to end up needing a procedure that's going to end up billing the hospital, right? So like I feel like it's not just the ticket size, it's also the variability of how much money is going to be earned from that time spent,
got it, got it.
Yeah.
right? And you can optimize as much as you want, but like I guess the next step would be to optimize for subsections within primary healthcare. Like, okay, if there's like very minor trauma that's all funneled to like a specific center, or like you know what I mean? Like if you're just here for medication refills, that all gets funneled to a specific center. Like maybe you can optimize there, but
Mm,
like right now the PCP or the primary care physician or the MBBS doctor in India is handling so much volume in so many different areas that it's hard to, I guess, like assimilate everything and then standardize and optimize.
got it.
Um,
Also
it-
to differentiate because you can't get say highly paid doctors who are well known in that field, right?
correct.
That
Yeah,
just
yeah, that's not going to
yeah.
happen because they're going to end up specializing. All right, so going on to the next question, I think you talked a little bit about unit economics. Can you tell us a little bit more about the unit economics of a healthcare entity, like how you go about it? What are the common metrics you used
Yeah.
to sort of evaluate a
So
healthcare system? Yeah,
to evaluate a healthcare system, got it.
yeah,
So uh, there is a bunch of common metrics which apply across all businesses,
right.
which is looking at the top line on say what's the scale, what's the revenue your business is generating.
Yeah.
And then looking at the profitability of it.
Right.
Specific to healthcare system, then it's all about how you break down these metrics into sector-specific numbers so that you can get more insight out of it, right? So if you look at revenue in a healthcare system, the way it's usually broken out is first you'll separate it by the center to look at what are your mature centers, which are say greater than 5 years of opening date
Operations.
at,
Right.
because typically that's where they start saturating. You might not have a steep ramp up curve coming in. And then you look at the vintages from year 0 to year 5 and seeing how is that ramp up going on, how's the execution, right? Now if we break down this revenue further,
Right.
uh, the biggest driver which impacts the profitability and hence the returns of healthcare investments is occupancy. So that's why we always break down the revenue by occupancy.
Nice.
So it will be how many beds you have. That's in a way an indicator
The
of also the real
capacity.
estate and
Right.
capacity, those things going on. So
Right.
the number of beds you have into the occupancy that you are seeing on an average, and that multiplied by a term called RPOB, which is the average revenue per occupied bed. Uh,
Amazing. So it's like
yeah.
a hotel
So
then.
that
It's kind of like a hotel. Like that's
Yeah.
how it would
yes,
be. Right. Okay.
exactly, exactly. And the reason why occupancy is always going to swing the outcome is say your occupancy goes from 60% to 70% uh, for that year, your costs don't change really, right? Like all your nursing staff, all your
Right. Right.
infrastructure. So a bunch of your cost is fixed in nature. So that occupancy is going to give you a lot of the revenue, which is almost
Being
directly
wasted.
translating and going down to your profits.
Right. Because like if you're at 100% occupancy, you could be making money. If you're at 70%, you're actually losing money. You're actually losing money that you could have made with the same amount of input. Right.
Right. Right.
So
Exactly.
you're basically,
Right.
so when you're increasing occupancy, you're not actually increasing profitability. You're actually just capturing what your potential could have been in the first place.
And again, it's the
You are
volume,
right. You are right.
right?
Say
It's
that
the
again?
volume. It's for, but
Yes.
Yeah, but let
Right.
me look. But the hospitals are not designed assuming they'll make the most money at 100%, because then 100% average occupancy means that your peaks and troughs then have a greater than 100%. Like the peaks will be greater than 100% also.
Right. There
Like
has to be some
an 80%
variability.
occupancy is like amazing in an hospital chain. That's where you make good profits, maybe 20% margins start getting captured.
So
Uh,
Interesting.
so yeah,
it's
that's
amazing.
that's on the top line when we talk about the unit economics. That's how you look at revenue, and then we start looking at the variable costs to see what is your gross margin for that particular facility. The variable costs are typically the drugs, the consumables which are used, laboratory charges,
Mm.
which you are incurring on a per procedure or per surgery basis. And doctor costs these days are fully variable. So they are linked to the revenue that the doctor is making. So
Of
we'll,
course.
we we put it on above the gross margin when we analyze businesses.
Yeah, of
There's some
course.
minimum guarantees, some retainers, but
Sure,
most
sure,
doctors are almost on variable. Like if the revenue will double, your costs on doctors are going to double.
of course.
Uh,
Doubles, doctors.
so
Yeah, correct. I mean, I think so. That's a very important metric, but that's for a hospital instead, right? The
yeah,
question is, do you also explore the moats, the complete competitor analysis, because also the market
yeah,
demand, since everyone will be getting into the same in segment or theme in the next few years, right? What is your thought
yes.
process behind actually maybe acquiring a firm or evaluating the potential revenue of that firm in the next few years?
Got it. Makes sense. So uh, the way to think about it is uh, establishing again the same thing, right? What's your high probability case that you see if of the economics playing out in the future? Like what's the revenue growth? What's the profitability? And then what's the degree of confidence on those numbers? That essentially means how tight is your funnel? Like is it a high range of outcomes or is it a low range of outcomes? There's a bunch of things which flow into this. So the first thing investors will look at is the nature of the demand. Is it non-discretionary? Is it recurring? if you're performing more elective procedures, the demand is going to be discretionary because people can wait it out in times of recessions. For
Interesting.
example, your LASIK procedures or things like knee replacement to a certain degree, these can be waited out. But more chronic or more emergency kind of procedures can't be waited out. So that's the first thing. Anything to do with illnesses, accidents, births, and chronic care, they don't follow economic cycles. So
This
when
chronic.
looking,
Dude,
yeah,
so just to kind of put it out, Jugal is not a physician, right? Like,
Yeah.
but the way he's talking about healthcare, like this is why it's so important to talk about like healthcare with people outside of healthcare, but who impact healthcare. Because like look at the way he looks at healthcare and look at how we look at it, Mohit.
Yeah,
It's so different. That's it. This is awesome. Like this is the way, like it's just the vantage point is so different, right? Like it's so the way you see it and the way we see it is so different. Um,
yeah,
because I was telling Mohit about this, and I think sometimes Mohit and I, being physicians, we are in the thick of it. Like we are in it. We're
yeah,
like the soldiers in a war, right? And then the people who are making decisions, the admin or the CEOs, etc., the investors, were the people who are actually running the businesses. They're kind of like the generals that are overlooking the
yeah,
battlefield and are able to see forces that are not that we can't see um, when we're like
yeah.
boots on the ground, right?
Yeah,
Um,
it's a lot of pattern recognition, right? Like if you
correct,
zoom out, maybe you can correlate things. If you are in it, you see a lot of the detail and like you know the truth. Maybe you can call out investors saying, "Hey, what are you talking about? This is not how it works." Yeah,
it's true.
wow, wonderful.
But yeah,
mm,
so I think the next question sort of that we had was like, let's say as Mohit said, as you are evaluating whether you want to invest in a particular institute or like a healthcare
mm.
system. What are the different players on your end that sort of evaluate this entity, right? Like from an end-to-end point, like what are the different teams that you guys engage with? Who do you talk to kind of figure out and tease out whether this is a profitable investment or not for you?
Oh, so you're talking about an investment process and who are the people
Correct,
involved in it?
correct, correct.
Got it. Sure, sure. So, uh, so the first step, like there's multiple parts in it involved. One, the first part is evaluation. The second part is negotiations and in a way getting to a deal. And then the third is post-deal reaching something called as closing when you transfer the money,
Right,
right? So break it down into three parts largely. So the first part involves doing a lot of market scans, forming your own thesis as an investor in terms of your belief systems, right? Because investing at the end is all about what do you believe? Where is the world moving? Where will it be 10 years later? If I believe that uh, insurance companies are gaining leverage, that's where the money is coming towards. I'll maybe scan a lot more health insurance players than looking at hospitals. Similarly, if I believe that uh, say small sized single specialty clinics is the way to go instead of large multi-specialty, that's where I'm going to go. So there's a
correct,
thesis and rationale behind it as an investor that you start with, and then you start looking for assets which fit your thesis. So in a way,
correct,
this is saying that which pond do I even want to go for fishing before I try to,
correct,
pick out those specific fishes.
correct.
So that's how it starts. Then you start looking at the market. There are a lot of ways to do it. You can directly scan databases for certain revenue scales, certain geographies, all of those filters, and see which companies exist. You can speak to market participants, say senior professionals in the healthcare industry who might have been board members, might have been CEOs, and they have their own networks. There are investment bankers who do the same thing. They map the sector, they have relationships, so you can talk to them about opportunities. So there's a bunch of ways to become aware of what are the hospitals or the assets present in the market,
Okay,
which might become up. Then the second is which of them would have the need for an investment. The need for investment can come in two ways. Either it's a primary capital where the money is being pumped inside the company and it's
correct,
being used for some business operations like acquisition, capacity expansion, opening of new markets or geographies, new specialties that you want to explore, all of those things. Or it could be a secondary investment where you are purchasing the stake from an existing shareholder, most likely changing the control, where a seasoned doctor has grown the practice, but now has become old. Maybe his children don't want to manage the same business, so
Right.
he's just going to sell it out to a financial sponsor and monetize what he has made. Uh, there could be discrepancies between the shareholders and they want to sell it. So there's a bunch of reasons why someone would want to transfer control or give up their existing stake for liquidity. So that's another way in which you could get. So as an investor, you could bring capital to solve some of these problems
Right.
and find an investment opportunity.
Hmm.
Once you lock in to an asset, saying,
Hmm.
hey, this is where there's a potential for an investment to be made, that's when you start the process. So till
Right.
now, the participants were, say, advisors, senior professionals in the industry, or investment bankers.
Right.
Once you start evaluating it, uh, the everyone has their own way of evaluating it, but largely it's about understanding the market, understanding the landscape of all the players, and where the company in evaluation stacks up against the others, so that you can decide whether you like it or not, whether it can give you the desired returns or not.
The
Right? Uh, yes.
the issue with this approach, what I feel is, for instance, a lot of the market itself is based on secondary research, right? So let's say I take Ahmedabad, for example. I'm
Yeah.
blind. I don't know what market to invest in. There's so many players.
Yes.
The question is now, are investors investing in trend setters, like people who are setting a trend, versus just following the trend and exploring the gap? How does it work in that case?
Uh, so there is investment interest in both, honestly, especially when we talk about healthcare.
Yeah.
Hmm.
Uh, the there are trend setters, like there are completely new models which are coming in, which are trying to create new categories, trying to disrupt existing health models. They might be offering telemedicine, they might be
Hmm.
offering maybe more
AI-based medicine or
holistic way in
something.
which,
Yeah.
yeah, exactly, diagnostics in a better manner. So there are these companies which exist. Usually, the investors which are looking to invest in these companies is a very different bunch, because these companies would be smaller in size. These companies would be
Right.
growing faster. At the same time, they might not be profitable.
Yeah.
So that so if I'm an investor, so think of it as an investor. If I'm a late stage investor, which means
Hmm.
I'm investing
In mature
large,
companies.
uh, yeah, large check sizes and mature companies. What my guardrails are, I can invest minimum $200 million in a company. I cannot invest lesser than that because I need to deploy, say, $1 billion in a year. So I
Right.
cannot do $10 million investments. And
Hmm.
these companies that you are talking about will mostly fit into those.
Correct.
Their valuations might not be crossing $50 million, let alone how much funds you can invest in these companies.
Right.
So it's a very different uh, uh, stage of investment when we are looking at it. That companies which are subscale are typically offsetted by being high growth, so that the valuation and the investment returns can be justified. But if you're looking at
Right.
if you're looking at mature stage, you expect steady cash flows and maybe decent compounding, but you will never expect it to be a multi-bagger
An
where the company becomes
explosion.
10x in
Yeah.
5 years. Yeah,
Sure.
yeah. So this will define what you're looking at. And when we think of creating companies versus following the trend that you are asking about,
Hmm.
it will, like, in reality, when you look at the scale, when you look at the companies, they will clearly fall under one of these buckets into what an investor is looking for in
Got
the
it.
market.
Got it. Got it.
I have
So,
one question. Just at this point of the investment process, when you're like assessing something and you're teasing out information and you're trying to assess whether it's a good idea, a bad idea, whatever. Um,
Hmm.
and as Mohit pointed out, that there's a lot of secondary research that goes into this, right? Like, so then, because you are relying on the opinion of the people that you hire to do your research, right? But those people are not necessarily physicians or doctors or like the nursing staff or people who are working in the hospital. These are people who are
Right.
also reading reports, also, so they are also getting secondhand knowledge. and then they are
Yes.
analyzing it and they are giving it to you. So you, in a way, are quite far away from the primary source of your data, right?
Yes.
So how do you reliably um sort of how can you rely on data that is like so far away? And this might be a bias, as you said, early on, that we are very risk averse and we try to we err on the side of caution. So like if you were to tell me about a patient, like we don't even trust the other people's notes, right? Like we always
Yeah.
go back, even other physicians' notes, we go back and we verify this with the stuff ourselves.
Yeah.
How can you invest that amount of money based off of somebody else telling you what's going on, and that person is also telling you based off of interviews that they've done or they've like maybe assessed? Like, isn't that
Yeah.
such a
No, you
big
are right.
risk?
You are right. You are right. And that is, I think, exactly one of the most important things, because at the end of doing all the work of saying whether I talked to 50 people or I hired, say, 20 advisors, the question is, do I believe in it, right? Do I believe
Correct.
that
Is this actually truth?
yeah, exactly. What did I set out to check, that whether this is a high growth
Correct.
market? After doing all the work, it needs to be convincing enough for me to say that I believe in it. If I read a report which says that this is a, say, a 20% growth market, is it sufficient? Is it not sufficient? That's the question, right?
Yeah.
So the you are right. I mean, and this is again, super critical in the investment process on what do you focus on your energy on, because
Right.
there are so many things you need to check out. You need to check where you stand versus the peers. You need to check what the market is within the broader market. Is this an attractive subsegment? As a
Right.
player, like on the asset itself, does it have sustainable growth? Is the management top quality? Are there governance issues?
Yeah.
Uh, were there legal problems which happened for the company? Is there a reputation risk, like say some doctor known for performing a malpractice? Like there's so many
Right.
things that you could think of and which you need to check.
This is
So
like
the
this is
first
like
step,
checking the vitals of a patient, right? Like you're
Yeah.
assessing the health of a healthcare system in a way.
I think so.
exactly.
Sharon, most of the and Jugal, I think so. Most of the investment process itself is very secondary research driven. Definitely, there's some certain interviews conducted, but that's at the topper management who are not actually kind of healthcare professionals. Now, let's say
Hmm.
a doctor in India,
So just sorry to cut you off on that one, but uh, the research is secondary initially, but as you start narrowing on
it's primary.
saying that I'm going to invest on this, it becomes super primary. There are
So that's what we want to. So
mystery.
tell us about that. Tell us
Yeah,
about that. Yeah, tell us about that.
sure. So exactly like Mohit said, right? Like initially, you'll start by reading a lot of reports. You'll see a bunch of data, maybe doing a bunch of analysis on all the public data which exists out there. I'll maybe
Sure.
map 100 companies, compare my company with this particular company.
Okay.
Hmm.
This gives me a particular level of comfort where I feel that this company has the potential to be better than the others. This hospital chain has the defensible moats. It's in
Right.
attractive segments, all of it. Then I begin the second stage where I have some hypotheses. I need to test things which matter the most to me, right?
Okay.
Because if the if I look at 10 other players in the same industry which have grown at say 20%, and my particular company in question has also grown 20%, I don't have a big worry saying can it continue the same growth in the future,
Right. Okay.
right? So that's based
Yeah,
on the
that's
data
fair.
I see, the secondary data,
That's
the
that's
secondary
fair.
data I see.
That's fair.
But at the same time, if I've seen that the industry has grown in single digits, everyone has grown in single digits, and the particular company in question has, been
Ballooned.
25% over the
Sure.
last 5 years, then I need to get a lot more conviction that this can continue even at the scale that they have now reached. Uh,
Correct.
and all. So there's a different importance on the same metric depending on the data I see from secondary. So I'll narrow in on some key hypothesis from the secondary data, and I'll
Right.
call it my say what really matters. You know that if these things
Right.
check out, my investment checks out,
Sure.
right? After that, I'll go behind these questions. I could have say three key questions saying, uh, can the company sustainably grow at 20%? Is there enough headroom to open 50 new centers in the country while going ahead? And the
Yeah.
third question is, can the margin, like profit margin, expand from 10% today to 15% in the future? Because
Okay.
I know that if these three things check out, it
You
translates
will
to
make
me
money.
getting my,
You will make
yeah,
money.
my
Yeah,
desired rate of return.
sure.
Exactly. So
But
this is how I narrow down to my questions.
yeah,
After that, I engage advisors. I'll hire consultants, management consultants who do expert calls. So again, exactly what you said, Mohit, right? Like they'll talk to the top professionals, they'll talk to CEOs, they'll do blind calls so that there's no bias. All of those things happen. There'll be some findings because when you talk to people at the top, they give you more strategic
Yeah.
way to look at these
Insights.
things. They'll
Yeah.
point out nuances which you don't know. So because what you don't know, you can't
You
even
can't
go and check for
evaluate.
it.
You can't evaluate. Yeah,
Exactly.
you
And
can't
then
measure.
then there's the third step. When you start going and checking on the ground, you make mystery visits to say facilities, to peers. You might do like just random blind calls with potential customers. Sometimes we get a list of patients or of customers in other industries, and we try to talk to them on how their experience has been, on how say
Right.
some of the specific things on like I might just call 20 people up and ask if the discharge was happening on time because I've heard customer complaints. I've seen some of that research that there are delayed discharges and insurance payouts not coming for this particular facility. So we narrow down on very specific issues, which could be deal makers or breakers. And that's where most of the energy goes in. Also, a lot of money goes into evaluate these things.
The granular on the ground stuff, right? Like so, but
Yeah,
it's important because it's so expensive to do. You need to start from the top and figure out and isolate and tease out the specific questions you want to ask, and then you
right.
go in and invest as much as you can to kind of find out those answers because otherwise it's too expensive to find everything out.
Exactly.
Right.
Yeah. In fact, like I usually say, biggest uh, the biggest task of an investor in this process is to just ask the right questions. There's enough resources and enough expertise that you can
Around.
tap into to get those answers. But you need to make sure that you are asking the right questions and not getting lost in the noise.
got it,
Yeah.
got it, got it. And what are the some common what are the some things that are common to other businesses and very unique to healthcare business in general?
Uh, so you're asking like in the evaluation process, what would be common
Yeah.
versus what is specific?
Yeah,
Okay.
what is unique about
Uh,
investments in the healthcare business when you compare to other industries in general? So let me rephrase my question.
yeah.
Uh, what are some things that are unique to the healthcare business itself that is not
Mhm.
unique in other businesses that exist?
Yeah. Got it. Got it. Makes sense. So there are a bunch of risks which are very unique to the healthcare system. Largely, like there's three big risks which I see. One is it's a regulated industry, right? So
Yeah.
there are price caps, there are rate freezes which
Hmm.
come in sometimes. Like in India, uh, rents have seen a rate cap.
Yeah.
So
Yeah.
after a particular point, you can't charge even if the customer is willing to pay more. You are ready to charge more. So there are these price caps, and those compress your margins, they compress your ARPOB when you're looking at it. And this is unpredictable in nature, right? Suddenly, the regulator might go in a different direction and uh, start becoming, say, favorable towards one set of stakeholder in the value chain, which ends up coming at your cost.
Right.
So it can either be protecting, yeah, like in general, regulators would be protecting patient interests or
Patient
retail interests,
interest.
but
Of course.
at the same time looking at, if there is any particular incident which happens, like if there is one hospital where there's an incident which comes in on uh, say a malpractice by a doctor.
Right.
Suddenly there will be a bunch of requirements that the regulator will bring in for all the hospitals, and you are required to invest a lot more capital, or you are required to follow
Right.
stringent procedures, more
Right.
documentation, all of those things. So there are these things which can come up ad hoc, and that's a big risk. Typically not seen in a lot of other industries. So this could suddenly become a not so attractive investment once you are in it, and it's not something you can foresee. The second is, I would say, wage inflation and staff shortages. This is very, very specific
Hmm.
to healthcare, which we see. Nursing staff, embryologists, these kinds of
Support
uh,
staff. Yeah.
inflation. So India always faces a shortage. There's high attrition because there is not enough pay which
Right.
is going towards these roles. At the same time, they are super critical in delivering the healthcare services. So everyone is in shortage. They're looking
Correct.
for it. Uh, Nursing staff in particular,
There's a
once they
very
get
high
trained,
attrition. Yeah.
typically tend to move to say Middle East or somewhere where they find better opportunities, and again
Yeah.
we become the training ground for these. So investing in retention, training pipelines, uh, like selectively automating some of these things for diagnostics, back office even becomes more critical. So these are again specific things you need to evaluate on the problems which the particular asset in question is going through or not when you're looking at it as an investor. And the third thing is just the burden on uh, capital expenditure you need to make. Because while two hospital chains might look the same on paper, that they have the same number of centers, they have the same number of beds, same revenue,
Right.
all of those things, the uh, the actual quality of the
Care.
like say the assets which I'm talking about. By assets, I
Right.
mean the machinery, the facilities, all of those things might be different. So I might have to invest in a complete renovation in one of the hospital because it was not maintained properly. It's not
Right.
kept in the best manner. Maybe the staff
Excuse
or
me.
the quality of the patients in that catchment is different. All of those
Right.
things, right? So the amount of capital that a particular hospital chain can suck in, even after an investment, needs to be looked at properly. Again, because all of these directly impacts clinical outcomes. You cannot have safe uh, any issues with your fire safety, with your licenses, with uh, your machinery being out of date, all
Right.
of that. So whatever investment it will require after me as an investor coming in, it needs to be made, and that can erode away returns. So again, this is like a third thing which is very specific to healthcare, where on the surface it might look like it's the same, but once you come in, you uncover so many things.
That's a very it's a very good, I think that's a very great transition for our next question, which is like we are seeing the underbelly of the US healthcare system because we're going through it. Right? We are
Hmm.
interacting with every single node of the healthcare system right now because we are in the process of training. So we're seeing it from the ground up. The question is there a role for somebody like that in the like in the consulting or the investment banking business? And if so, how would that play out?
Got it. Yeah. So of course, like for sure, it is possible. This is nowhere close to being a physician where you require years of training, where you require uh, specific knowledge which cannot be gathered. This is more, I would say, pattern recognition, trying to apply the first principles, trying to being like, just asking the right questions. It's at the end, it's the same thing. And you can build that muscle even being a physician where you're doing the same thing with the patients and all of it, right? The only part of it which is missing is the knowledge of finance in a way on
Right,
how does it
right.
translate to numbers, how does it
Hmm.
translate to whether I can make money or not. Because I'm sure if you look at a hospital materials which they have created to raise investment, more likely than not, you will have a point of view saying this seems to be a good hospital or this doesn't seem to be a good hospital. So you will get that point of view. So there is one layer of saying whether this is an investable asset, and then there's a second layer of saying what
How
deal makes it
much?
work, what returns can we expect, all of those
So
things,
like
right? What's the right valuation?
the quantitative
Yeah,
side of things, I guess would be the thing
exactly.
that's missing, right?
Got it. So
Right.
that's
Uh,
a one-year course.
Yeah, exactly. So I think that first part of it is anyways achieved, which is why you also see so many people who transition from healthcare or from any other industry into investment funds, and they typically try to join as something called operating partners, where
Okay.
after the investment has been made, there's value creation to be done. There's actual uh, initiatives to be kicked off where you can try to turn around the asset, where you can try to improve margins. There's interaction needed at the board level, at the management level, at the employee level. And if you are doctors yourself, it's easy to empathize on those problems. They'll listen to you to what
Yeah.
you are trying to say, right? So all of these things are benefits of having been in the same industry, having done the same things before you shift to the other side, because you get their pain, and in a way they also look up to you.
I think the second thing that you said, like they look up to you, I think that's so true because every time we have somebody who comes in who's not a physician, tell us about how
Mm.
to like do start like run our practice or like do things. We're always like, dude, but you haven't even taken care of one patient. How, like, yes, sure, in your imagined, made up money world or mathematically it made sense, but like, you don't know what it's like, right? But like, when you are a physician
Yeah.
and you do that, you have that innate trust in your peers that, okay, this person probably saw that, understood it, has taken that into account, and then is talking to us. I think
Yeah.
that I've seen that in the healthcare community very strongly. That if an MD comes and talks to you, they will listen very intently. And it can be about anything.
Exactly.
It can be about investments, and it can be about healthcare, and it can be about anything. But they will listen.
The question is,
Right. Right.
everything has become so specialized. So even if M,
That's another. That's
like
true.
everything, not in terms
That's
of
true.
healthcare, but in terms of thought processes as well. There's an expert in finance, there's an expert in health
Yeah.
tech, there's an expert in operations. The question is, now if an individual physician has to establish a chain of practices, how can he hire that many resources to even continue and operate? It's a very difficult elephant task that I think so. It's next to impossible unless he has raised a lot of capital.
So uh,
Let's say
I
I,
would say partially you are right, because it's a function of speed, right? You
yeah.
could
Right.
reinvest the money that you make out of your first center and open the
Yeah.
second center in year five.
Yeah.
Then again, 3 years later, you can use the funds from these two and open the third one. But
Yeah.
if your ambition is to go faster, to have say 10 centers at the end of year four, then you need money. So
You need
in a
money.
way, it's a trade-off of saying, yeah, it's a trade-off of saying that
I like
I
that.
get money so that I can go faster.
I
Yeah.
like that.
But I own a smaller percentage of that larger business.
Versus
That's true. Yeah.
bootstrapping. Now the trend is bootstrapping.
But
Yeah, right.
yeah, I think this was a phenomenal 1 hour conversation. I think Mohit and I learned a lot. I always learn a lot from you, Jugal, and I think I will continue to learn from you in the future. Thank you so much for coming on the Doc Suit. We thoroughly enjoyed. The closing remarks, Mohit.
To be honest, I got a 1 hour MBA finance lecture.
MBA finance lecture.
I think so. I
Uh,
was in Harvard class right now
I
here.
know.
But yeah, thank you, Jugal, for
Thank
actually
you, man.
joining. I really appreciate your thought process and what knowledge you have shared. I think so. This podcast was more about knowledge sharing and understanding, and also empathizing on where do
Yeah.
different backgrounds come and how do they interact with each other, the various stakeholders in the healthcare system. But yeah, thank you so much.
Thank you so much.
that's great. I mean, following your podcast ever since I started. So I think it's been a good one for me to finally be here, have
Be
the
here as a
discussion with
guest.
you guys. Yeah, so I think equally enjoyed the discussion and the specific questions that you guys come up with, right? Even into the discussion, probing into some of these areas. It provokes thoughts for me as well, that some of these things might uh, not be consciously in my thought process when I'm thinking about it as an investor, but when you mention it
Ask about
on,
it.
what
Yeah.
are these differences on? Yeah. So it's always good to get that perspective.
No,
Yeah. Wow.
perfect. All
Beautiful.
right. All right. That's a wrap.